Hello,
Hello.
I'm Stacey Mankoff, and I'd like to welcome you to volume 23 of the Bellringer. And today we're going to be discussing today's market and assessing investment opportunities. And we are delighted to welcome Colleen Kelleher Sorrentino, who has launched Kelleher Financial Advisors in '95, but has been in the industry for many years. Colleen works with high net worth individuals, families, foundations, and corporations and builds diversified multi-asset class portfolios for their liquid assets. In addition to building appropriate portfolios, Colleen provides financial advice on a wide range of services, including alternative investments, estate planning, insurance, retirement planning, businesses, and more. She was awarded Wealth Manager of the Year in 2011 by Manhattan Magazine and has been featured in Proactive Advisor Magazine, Forbes, and is a frequent speaker at RIA events. Welcome, Colleen.
Thank you so much, Stacey. It's very nice to be here.
Terrific. Well, it's been quite the time in the markets right now, and you're heavily involved in this. And I'd like to get your opinion of the market today and the trajectory you think we're on right now.
Well, as you had mentioned, it's been quite a ride. We're in a very volatile environment with the market. A lot of it has been caused by, as we all know, high inflation, which is leading to higher interest rates. And it's creating a environment where prices for companies have come down, earnings estimates have been reduced. And we, as long-term investors, feel that this is a great time to start allocating more to equities. The problem with today was that clients who had bonds in their portfolio are down double digits on their bonds because as interest rates go up, prices of bonds have gone down. So the concern is, are we going into a recession?
Right.
And I think that it's a good possibility that we are.
Okay.
And so the market is, reflecting that. It's reducing earning estimates, valuations are coming down. And, as I just mentioned, if you are a long-term investor, this is a great time to start putting more money into the market. Obviously, if you're short-term, no one can predict, but long-term, it's a very good time.
So you would advise for a client to hedge against the imminent recession or anything like that, to go into what sort of areas or industries would you recommend?
Well, growth had done really well for the last, say, 7 years, and growth in the NASDAQ have been hit the hardest. We do think that there's great opportunities in that particular segment. We believe in a diversified portfolio of value and growth overseas and small cap. Right now, the best sector for the year has been energy.
Okay.
Not sure if you want to put more money there now because it's done so well, but sort of just buying the market and buying different places that have been hit really, really hard, which has been pretty much everything. Unfortunately, in today, inflation, typically gold has done well. Gold has not done as well during an inflationary period. So there really hasn't been too many places that did well this year. You can sort of hide from the market. When markets go down, everything tends to go down.
So would you see this as an opportunity for certain investors to buy into areas that are quite low now that maybe several years down the road will come back?
I do. We do. We think technology, particularly the big names like Google and Apple, Facebook, they have great businesses. They have a moat around it. Their earnings are very good. Maybe they've come down. We think this is a great opportunity to start getting into something like that. We think, maybe even increasing some of the bonds slowly since interest rates have come up. So you're getting a little bit more on your money, but remember, inflation has increased. So you're still not making on a real return basis anything on your bonds. But, we do still really like technology.
Mhm.
Unfortunately, there were a lot of companies that were overvalued and had unrealistic expectations that drove a lot of these other companies up. And so we would stay away from those more speculative names, but the really behemoth technology companies are a great place. I mean, I think of Google as one of the greatest companies out there. I believe they're down about 35% for the year.
Right.
And they are just, competitive in pretty much every area that they've gotten into. Right. So that is one area that we continue to like for the future.
Mm-hmm. So I know you deal with a lot of different types of clients. There are some that are in their retirement phase, some that have young children. Let's parse that down. So let's say I have, a couple of years towards retirement. What would you recommend that I have in place or should start putting towards right now?
If you have a couple of years?
Well, let's say 10 years.
Oh, 10 years. We're still recommending that people should have between 5 and 10% in cash. Mm-hmm. You should have stocks. We would say probably, maybe 40% in equities and 50% in other more conservative. Mm-hmm. We would stay away from more of the aggressive parts of the market, like emerging markets and small cap.
Okay.
But, have to, even though people go into retirement in 10 years, life expectancy is higher. Right. So you have to make sure that your money continues to grow for you. So we still believe that you should have a large portion of your portfolio in equities, but the right equities, large cap, solid, dividend paying stocks, but having cash is always king, particularly during times like this. Mm-hmm. It also gives you the availability to buy the dips. So you don't want to be fully invested, but you do want to have, 40 to 50% in equities.
Okay. So what happens if let's say you are sending your children off to college or you want to save to do that? What mm-hmm. What kinds of vehicles is that the right word? Would you recommend? Let's say I have, sort of young kids and I want to make sure that there's enough money because God knows how much college is going to be by the time they go to college.
So what we recommend is that obviously that parents start saving very early.
Okay.
Once the child has been born, because like you said, you have 18 years and college is very expensive.
Right.
And the tuition rates are going up every year. So we suggest that opening up a 529 plan, typically in your state, and contributing to that every year, having a very high growth portfolio. A lot of have sort of pre-planned portfolio, like a growth. We believe in growth and aggressive growth, particularly child is young and you have 18 years to invest. As the child is nearing college, changing that mix to be more conservative and balanced.
So obviously, there's different aspects for when you're investing at different times. Let's look down the future. How cyclical is this period right now? Do you see a short recession? Do you see a long recession? How much buffer, what would you tell your clients?
But obviously it's very hard to predict.
Right.
I hope it's a short recession. Recessions are cyclical. I mean, it happens in the cycle of a long-term economy that you have recessions and growth. Mm-hmm. Hopefully the Fed did get ahead of it itself and is trying to control it. But for the most part, we think it's very high probability that we do have one. We don't think it will be tremendously long. We believe in the spirit of America, people working hard, growth, opportunities, innovation, which will help the economy then continue on the next step of a growth economy. But It's really hard to say, but maybe a year or two.
Okay. Thank you, Colleen. I really appreciate this little snapshot of information, and we look forward to more of your getting more information from you over the next few months. Thank you so much, and thank you everyone for participating. Yes, and thank you all. We look forward to seeing you at the next Bellringer. Have a great summer. Bye-bye.
Thank you. Bye-bye.